Good morning. Ira Epstein of Linn Associates with your morning flash update for this Monday, the 27th of January, 2020, and we're right now at about 9:20 a.m. Central Time. There's plenty of economic data, but as you know, that's not what's ruling the day. What's ruling the day is the concern about this coronavirus, the speed that it's moving at, the amount of deaths. We're up to, 81 now. The case counts keep mounting much higher. And the question is, what does it mean? So you see this big amount of red in the stock indices. Now, we were talking back at the end of December, if you'll recall, what event was going to come about to create a buying opportunity in the stock market. You heard the word buying opportunity out of me. Well, you're getting that break now. Where, when, that's anybody's guess. But this pullback will alter some fundamentals, not all. Certainly, China's going to see its GDP shrink. You've got people that aren't going out. They're not spending. Macau's business is down, I heard, 65%. Cinemas are closed. They're not going to open the stock exchange now in Shanghai until the 3rd of February. Students aren't going back to school until around February 17th. We don't know when factories will reopen. That's China. We go to our industries, they're still doing fine. Remember, U.S. exports to China are nothing like they are to Canada and Mexico. And again, on this Wednesday, the president's going to be signing the USMCA deal, and supposedly Canada's going to pass their trade deal on the 29th. Let's look, though, at the rest of the daily info. New home sales, well, they came in down 0.4 to 694. They were expecting up 1.5, so they did back off a little bit. They're saying that new home sales have a supply of 5.7 months, so they've gone up about 3 months compared to the last report. And the price, well, it's always going up, 331,400. For the cases of the coronavirus, we have 27,444 with 81 confirmed deaths. So the ratios keep climbing up. The Dallas Fed's going to update their monthly regional outlook at 9:30, about 10 minutes from now. The last month figure was negative 3.2. And remember, at the upcoming Fed meeting that's happening starting tomorrow, we have a 2-day FOMC meeting. We get the 4 new governors that are coming in, 4 new bank presidents as the rotation goes on. U.S. new home sales for December is going to be updated, well, just happened at 9 o'clock. Weekly Baker Hughes, that came in at 710 from 709. That wasn't terrible. When we come on to the German IFO Business Climate Index, it was 95.9, below expectations of 97. And of course, if you look at current conditions for January, they were 99.1 versus the index was 92.9. So I think people are feeling better about things in Europe up until this virus, and that's going to scare everything. Remember, at 1 o'clock today, the impeachment trial of President Trump resumes. So with all this going on, you still pay attention. Let me give you my words of wisdom. As a chartist and somebody that has been through the SARS, the MERS, the SARS, all these different virus epidemics, if you stop paying attention to your charts and you get involved in the emotion of the trade, inevitably what seems to happen is you find a reason why you lost. Pretty simple. I am not saying everybody's going to lose if they get emotional trading. That's not the point. But having owned and do own a brokerage firm and talking to thousands of clients over many, many decades, the one thing that's prevalent is when you break your disciplines of trading, you get yourself into trouble. So if you get up to a Bollinger Band or down to one, is that a spot where you're selling more, buying more? It should not be. Metal markets had a heck of a rally. I know the first thing I put out this morning for my clients, pay attention to where the markets are. Well, same thing's going on in grains. You're getting very cheap. Does this mean that China doesn't have to buy the amount of grain right now? Well, at this moment they don't because everybody's scary, but they got to replenish all their pipelines, and the question is, when does that happen? If you go back to SARS, the whole disease ran about 6 months, and then it was like gone, and that could be the case here. So we have to wait and see. It's always worst at the beginning, and things start, once you get your arms around what you're dealing with, it typically gets better. We're at that point where we're trying to get the arms around it to understand what this is all about. It is also the reason that you're down to 1.6 in the bond market. It's the reason that the gold hit 1594, but notice these markets are already 20 cents off the highs in the silver market. And the question is, for the stock market, you're 120 points off the lows already. I'm not a bottom picker, not interested in the day it bottoms. More interested is, when does it say it flattened out, blah, blah. Here's what I was saying. In December, we were talking there'd be an event. Don't know what it was going to be. I was on Fox talking about it, Bloomberg talking about it, and said, I don't know what it is, but we're getting up to the ratios where they're 19-20 to the price earnings ratios, and people are saying, well, that's the new norm. I don't know that that's the new norm. You know, I admit the Phillips curve's been pretty crazy, and you can argue that that didn't work anymore, but this type of break, probably healthy for the market overall, gets things back in line. Are there people waiting to buy on it? Here's the one thing I'll stick my neck out on. Yeah, they are. You'd have to say this disease can't be cured. To get to that point, we're not hearing anything like that at all. So use your head. That's what I'm trying to say. One of the products that I think you might have need of in something like this could be our chart of the day. Now, let me explain what this is. We send out every day charts that look like this, and we do what's called a price count. A price count is an interesting way of looking at a deviant of Fibonacci counts, swing line counts, where the markets might go in a what-if scenario. And it gives you up to 5 what-if scenarios based always on the same chart pattern. They follow through. Example, if you were going to get to a first count, fine, come down to it. The odds of getting to the second count, not as great as the first, and so on and so forth. But it's an area where the markets often stall out. We put together a 3-part video on it to show you how to work with it. If you'd like to try it, give us a call. You can go to our website. It's one of the free offers, our chart of the day. Sign up for it there. We'll take care of you. If you have any questions at all, just call my staff, 866-973-2077. I'm Ira Epstein.